What's up, YouTube? Let's talk about it. Let's talk about all of it. All right. It's Kenny again, and just be aware, I am not a financial advisor. I'm just a truck driver driving across the country, researching and trading stocks, and I will not be held responsible for any moves you make in the stock market. Not ever. I am not your mama. Do your own research. Make your own decisions and live with those decisions. So, I haven't made a lot of videos throughout all this stuff that's been happening. There haven't been a lot of videos to make. I mean, what I'm going to make a bunch of videos just saying, oh, well, everything's going to keep going down, and everything's going to keep going down, and everything's going to keep going down, because everything's kept going down, and I pretty much knew everything was going to keep going down, all right? And I'm going to say right now, everything's going to keep going down for a minute, all right? But look, there's some developments happening, specifically right now, crypto. I want to talk a little bit about this. I never got involved with any of those companies, and I'm still not. Anytime that I see something like crypto and these companies talking about how, well, if you lock it up, we're going to pay you interest, and we're going to pay you all these, they're going to pay you all these big numbers on interest, when interest in accounts was running like 0.4 is what I was getting in my savings. Anytime I'm seeing stuff like that, the whole time I was just thinking, no way, this is a fucking scam. There's no way that they're able to do that on something this volatile. It's just not safe. And so I never got involved in any of it. And I kept seeing all these YouTubers, BlockFi, BlockFi, FTX, and all this stuff. They're just pumping it and pumping it and pumping it. Voyager, and they're just, all of them, they're just pumping them and pumping them. And I'm like, no. I mean, not that they were offering me anything to like pump their company, but I'm not interested. You know what I mean? Everybody's telling, people not here on YouTube, but people telling me that I'm dumb for, buying my crypto on Webull and just doing short-term trades and not staying in it long-term. I don't like wallets because I don't like having to remember all the security shit. I'm afraid that I would fuck up and lose my information and not have access to it. But then I also have had people this whole time telling me, oh, it's not the time to buy. It's not the time to buy when I buy crypto. I buy it when it's dropped significantly. And everybody's saying, don't buy. And then I buy it and I sit on it for a few months and then I sell it for a profit. And I've done it over and over and over. And, I've been the whole time staying completely away from all this. We'll pay you interest and all this scammy looking stuff, okay? And now, it's been happening slowly with these companies, but now we're coming to a head now, the FTX thing and all, and who's next? What's next? You know what I mean? I'm just watching the prices, and when it drops to where I feel good about it, I'll buy a little bit. I'll sit on it for a few months. When it gets up, I'll sell it again. You know what I mean? That's the only way I think about playing crypto right now, unless we get to some massively low fucking price like 8,000 for Bitcoin or something, then I'd think about holding it long term, but it's just too much of a volatile asset to sit on, especially, people were buying and saying buy when it's like 50,000, and I'm looking at it and going, you guys are fucking crazy. Like, talk about buying at the top, and so, that's the way, to a certain extent, that I look at stocks as well. Everybody buy way up at the top when it's flying high, you know what I mean? But I'm looking at it now and I'm like, now is the time to be buying. Like now is the time to be buying stocks, Sure, I was making a lot of short-term plays, and it is true that I overestimated and bought too high, you know what I mean? But when I bought all this stuff that I'm sitting on now, it had gone down significantly from where it was. And so, you know, it felt low to me, but it wasn't low enough. You know, things are still continuing to tank. We're on a little bit of an uptrend right now, but I'm expecting a recession next year. So we may experience some of, you know, that, like everybody's calling it, what are they calling it? A end of year rally, a bear market rally, you know what I mean? To where there's a good possibility that things are going to come back down. There's also a possibility that Q1, Q2 of next year, things start going up. Like, I feel like we are near a bottom. What we're not near a bottom in is real estate, construction, and cars, okay? Like, these three things, manufacturing probably too, these things require a lot of loans. And with the interest rates being what they are, loans are expensive, okay? So that's why I talked about OIG and talked about how things had dramatically changed, and it's going to take them longer than what I had initially thought, because, you know, what they're doing requires a lot of capital, and it requires a lot of other people to come up with capital for them to complete these projects and stuff like that. So it's going to be a while. And we're looking at real estate, mortgage rates fucking 7%, you know what I mean? And you know, same thing with car loans. And when these interest rates go up like this, it becomes much more expensive on the payment side. So, you know, a mortgage payment that a couple of years ago would have cost you, say, $1,500 a month for your mortgage payment, now you're looking at $2,500 a month. So it's much more expensive to buy this stuff just based on the loan. So what happens is, because it's so expensive on the monthly payments, people stop buying because they can't afford it. They can't afford the house that they could have afforded 2 years ago. So what happens then? Prices start to come down because they have to take into account that end payment, that monthly payment, and make it affordable. And if it's not affordable enough, people are just not going to buy real estate and cars. Okay? It's just bottom line, guys. When you go to buy a car, you're looking at how much that monthly payment's going to be. And if it's going to be, you know, 50% more, you're going to be like, oh shit, I can't pay that much. And so what do they have to do? The only way they sell a bunch of cars is for them to bring the price down, instead of, that way it compensates for that interest rate to a certain point and brings that monthly cost down a little bit. So that's what I'm looking at. I'm looking at things like rents to slow down in the rate that they're going up, and I'm looking at products like things that you buy at Walmart and stuff like that, the price starting to come down. And I'm looking at real estate prices coming down, used car prices starting to come down. Used cars, like we look at Carvana, they're on the verge of bankruptcy, and they've got shit tons of used cars, okay, that they're not selling. You know, they're just sitting on right now. And they're losing money on car sales. CarMax, there's a CarMax, they're way down. They're losing money on the cars they're selling. When these companies do one of two things, either they go under or they drastically lower the prices of their cars, which is difficult because then they're going to be losing money on the sales. The used car market is going to be flooded with vehicles, and the prices are going to come down. Right now, used car prices are really high, and you know, I've been looking at it a lot because I'm wanting to buy a van in the next year. And so this, in my opinion, is going to work to my advantage because prices are outrageous right now. Like vans, like you're looking at a Ford Transit or something like that, which is the ones that are really popular for van life, like Ford Transit with like 160,000 miles on it, and they want like 25 grand for it. And I'm like, you got me fucked up, all right? But these prices are going to start coming down over this next year. Real estate prices are going to start coming down over this next year. We're going to see this, all right? And at the same time, for different reasons, product prices are going to start at least leveling out, if not coming down. Because what we're seeing is that, like during the pandemic, everybody's locked up in their house. They're not spending money going to Six Flags or going on vacation, going to the movies, stuff like that. So that money is going towards buying products, all right? Now things are really opening back up. People are spending money more to go to places, travel and stuff like that, and they're not buying as many products. And we're seeing this mass inventory buildup that's been going on for a while now. And what happens is these companies have to move these products, and the only way they move the products is to make them cheaper so people will buy them. There's a possibility we're about to go through a period of deflation, but you know, I will say that it's really hard to get somebody to drop a price once they've experienced making more money on it. You know what I mean? So we're just going to have to see how it plays out. Now, what does this mean as far as the markets are concerned? You know, we're seeing this shift from people thinking about revenue and growth to people thinking about cash flow and profitability. And this has been taking place for quite some time, this shift away from growth and toward value. Okay, now what's going to happen is it's going to start shifting back the other way. Now we may see through quite a bit of next year this continue with this value, but the thing is, these big hedge funds and stuff, the people that actually move these markets, they're going to start looking, they've got to perform for their clients, and they're going to start thinking, where is the profit at? Where's the profit at? And the profit is in these beat down dog stocks that have been beat down way longer than Google and all this other stuff. Like these big large caps that are coming down now, they may continue to go down and drag the market down with it. And the value now, the profit now is going to be seen in these smaller cap, small and mid cap stocks. And we're going to see this rotation take place, in my opinion, in the next 6 to 9 months, sometime next year. Something else I want to talk about that I haven't heard anybody really talking about. What do we hear every year around this time that we have not been hearing this year? Tax loss harvesting. Now, you know, if you've been watching my videos, that I'm not a fan of that strategy, but it is a real strategy. Okay, and how much money have these companies lost this year on these fucking stocks? And if you're trying to tell me that they're not going to sell some more to do this tax loss harvesting, this is, if ever there was a year to do it, okay, ever since I've been investing the last couple of years, I hear people talking about it around November, December every year, okay, and it never really materializes. Now, if it was going to materialize, this would be the year that there are big losses for them to capitalize on for that tax loss harvesting. So just keep that in mind. I don't know. You know, I don't have a crystal ball, guys, and I'm not a financial advisor. This is just my observations on what I'm seeing, all right? So I'm seeing that, you know, and everywhere I'm seeing indications that the market typically starts moving about 6 months before earnings and stuff hit their bottom, all right? Because the market tries to look forward. And so I'm seeing, in my opinion, Q1 to Q2, maybe Q3 of next year, we're going to turn the corner. And another thing that I've been seeing is that we're seeing massive shorting of the NASDAQ and stuff right now. Like, just all of a sudden we've had these huge inflows into like SQQQ, which is the short NASDAQ triple leverage, like inflows that we've never seen before. And if there's one thing that we know, it's that people get this shit wrong, like on massive scale. So like, you know, the whole fear and greed index, when people are fearful and selling everything and stuff, that's the time to think about buying. Same thing here. We're seeing massive inflows of people trying to short the NASDAQ and stuff like that. People are dummies. People buy at the top. People short at the bottom. This is what they do. Okay? It's an indication that now is the time to start buying. Now is the time to start dumping in. Yes, it can go lower. It's probably going to go lower, okay, before it gets better. But you don't know. You could wake up tomorrow and that shit skyrocketed and went to the moon. You know what I mean? You can't guess at it and nail it perfect right at the bottom. But like, guys, in my opinion, like, and I know I've been saying this, but I still believe that it was true 6 months ago as much as it is now. Only maybe more so now. That these are the times when money is made. These are the times when you should be loading up while everybody else is freaking out and selling off and shorting stocks. These are the times to load up on your favorite stocks that you have conviction in. And right now, with the where things are, even these high flyers like Tesla and Google and Square and you know, Shopify and these stocks, you know, like, you're guaranteed to make money at these prices if you sit on it for a few years. I mean, I there's no doubt in my mind. I don't know. I mean, I don't know that there's a whole lot more to say. You know, I really am, like, I'm starting right now, just really getting started on stacking money towards the van life thing. And so I'm being really careful with where I'm putting money, you know, and I just got another bump on my high yield savings account, guaranteeing me 3% on that if I sit it in there. And so I have not decided where I'm definitely going to keep putting some money in my Roth, okay? And any money, like, has been always happening if I, you know, when I finally get a payout from YouTube and stuff, because I haven't been making very many videos, that money goes into the YouTube portfolio. And I am keeping an eye on crypto. Like, crypto is starting to make my mouth water a little bit right now. All this stuff that's happening, like, it's probably going to push crypto a little bit lower. But I don't buy into all this. It's going to 8,000, it's going to 10,000. Like, I don't think that it's going to go to those lows. I think if you can get, if we get down in the 14s and you can buy in the 14s and hold on to it for a few months until all this stuff dies down, you're going to make some bank. All right, that's my opinion. I think you could buy at the price that it is right now today, and in 4 or 5 months make a profit. Because all this stuff's going to die down. But don't buy it at fucking crypto.com or Binance or one of these places with all these scammy sounding fucking things, okay? That's not where you buy it, in my opinion. Now, yes, when I buy on Webull, it's in an exchange, but that exchange doesn't offer you all of this free money on your investment and all this stuff that you're like, how are they doing this when it fluctuates this much? You know, that shit is scammy. And I'm even leery about doing it on Webull to a certain extent. Because I got an email the other day that said, don't worry, Apex, we're not hooked into any of this kind of FTX stuff or anything like that. And whenever they start sending out emails, like, that's, to me, excuse me, that to me is a little bit of a red flag. Because what did we see? FTX was like, oh no, FTX US is okay, everything's okay, nothing to see here, guys. And then, woohoo! Yeah. So the email in itself kind of is a little bit of a red flag to me. But I think as long as we don't see this 10,000, 8,000 type of number they're talking about, I think that a lot of the exchanges that are just doing stuff like Robinhood, Webull, stuff like that, that aren't doing all these scammy type of things like paying you extra and paying you interest and making you lock your crypto up for periods of time. I think the companies that aren't doing that are going to make it, as long as they don't have just like some massive bank run because crypto drops to $8,000 or something. You know, I think it's going to be fine. And especially if you're looking at short term and you're not putting hundreds of thousands of dollars and trying to in there and then needing to withdraw it. I mean, that's just my opinion, you know, and all of this is just my opinion. But I once again, just to you know, put a cap on it, I see real estate, cars, used cars, new cars, construction, manufacturing. I see these to be areas that are going to really suffer over this next year because of the interest rates. Okay. I think people are going to be doing more traveling than buying products. So I think that we could see products prices start to come down. But this means bad things for these companies like Walmart, Home Depot, Target, you know, these types of companies. Now, when money gets tight, companies like Dollar Tree, Dollar General tend to do good. You know, I could see travel having a little bit of a bounce back next year. I mean, I see small and mid caps. I see small and mid caps next year around mid year to the end of the year. I see small and mid caps doing really well. But again, I don't have a crystal ball and I'm not a financial advisor. So I just wanted to put these thoughts out there. Tell me what you think in the comments below, and thanks for watching.